How about now? I know the problem, what the problem was. Is that much better? Can you hear me now? That was a pretty epic failure. We'll talk about that too. All right, everyone can hear me. You guys can let me do the entire hour, and if I was not looking to the right, thank God I have Andrew here in the chat and behind the scenes to kind of help me out, because if I hadn't seen his message, I'm not looking at this screen where I can see the YouTube chat over on my right, and that could have been pretty epic because I probably would have just continued to ramble. But welcome everybody to Market Kickoff. We'll redo my intro there. I hope and thank everybody for tuning in, taking away from your, I think that's more than $5. I got to be honest. That's got to be like 10. I'll have to Venmo Jack at the end of this segment. But thanks everybody. It's Sunday. It's week 1 in the NFL. The Cowboys are winning. I'm not a Cowboys fan. I hope everyone has had a good Sunday, had a good weekend. There is a ton to talk about. We had a super interesting week last week. If you're new, if the first time you're tuning in, welcome to Market Kickoff. I'm Nick4ATick, also known as Nick, on these programs on TopstepTV. If you've never watched my show, this is a hour and a half of, just a kind of way for you to plan your week, figure your week out, understand how a top 10 trader at Topstep really is kind of creating a plan for their week, thinking about things. We're going to talk about volume profile. We're going to talk about ways that I trade, and we're going to formulate a plan, more or less areas of interest, things that we can kind of interact with in the given week. I don't take trades. If you've never seen me do this show, I'm not taking any Globex open trades, but we'll watch the open. We'll talk about options. We'll talk about earnings. We'll talk about all the data dumps that happened this week, or that will happen this week. And just things to keep an eye on, things to pay attention to, and hopefully ways to make you guys better traders. Things that I look for sometimes do work out, sometimes they don't, but at least you are kind of armed with a knowledge share of places that you could potentially look at entering, exiting, taking profit at, just different areas in the auction that we can continue to kind of interact with. And if we're thinking about last week or even last Sunday, I guess that's probably the best place to start. We had talked about when it came to NQ, and yes, once we broke that 2 weeks of balance, I was not looking to really fade the move. And I really didn't last week, albeit I could have held a lot of my trades a lot longer than I did, but I was looking for, places to reoffer, places where sellers were interested in potentially, pushing us back down. And we had a couple of those throughout the week that we'll talk about. But overall, we saw that weakness. We saw, pretty much from Tuesday morning on, I think we got this up pretty much all week, which was interesting. You got some initial strength pretty much out of the bell almost every day last week. And then we basically melted almost every day, got back down. If you look at the daily chart, it's not a great look, but I do think there is a potential buying opportunity here in the early parts of this week. If we look at things going back to, the last time we were trading in this area, I expect, this area may be defended, that we may open at here in the next 10 minutes. Like, this is a spot where if we're looking at, a path from the August low, the Bank of Japan low, whatever you would like to call it at this point, and then you kind of made this trip back. We made the run to go make a new all-time high, maybe even, break it, set a new one, hit 5,800, 6,000, all these crazy things that I think people were starting to talk about as we were making that run after the August low. Maybe even a good old-fashioned air horn that, we could hit, but we didn't get that. You had sellers continue to reoffer. And when we measure this is what's interesting and something to keep in mind in the early parts of this week is, okay, yeah, this low to high was roughly 10%. If we go to where we're trading at now, we almost did a 50% retrace of that entire move. And now we're pretty much in the middle. So if you're looking for just an overall perspective of where we are, well, we're sitting right around the SPX 5400 options wall. We're at a big round number at 5400 on ES. So, and you're at a 5% rotation back from that failure to make a new all-time high from the August low. So just those basic psychological things, we may get a passive rebid, Monday or Tuesday from this general area that we are most likely going to open at here in a few minutes, where you could passively see some buyers start to continue to step in. We saw further weakness in the likes of Nvidia and some of the big tech names into Friday, and even to, kind of the after hours portion, or whatever you want to call it. Friday's a weird one just because Globex isn't open. Nothing opens till Sunday. So when you get that kind of further weakness after the bell, it's interesting. But then you also think, hey, options aren't really holding anything up after the last 15 minutes. They're at 3:15 Central. So, a lot can be made of that, but it's just something to keep in mind. But it is an area kind of, if we're going back to, oops, let me delete that. If we're going back to this previous, area, whatever you want to call this initial kind of rebid that we had off that August low, this little, low volume node here from whatever you want to call it, 5411 to 5370, any part of that, I could expect and be looking for buyers to potentially step in this week and start to push us higher. And just a knee-jerk kind of pivot here of like, hey, I know I talk about pivots a lot with you guys, of a way to kind of not necessarily have a bias for the week, but an area where you're kind of thinking above this, I expect buyers to kind of be in control. Below that, sellers most likely may step on the gas a little bit. So when we're looking at last week's range and even the previous week range, and I think it's very important to have the kind of that week that we had when we made the August low. So early August, if you were to go back and kind of look at the tape then, some of these areas, some of these levels in the back of your mind. We talked about this on Slow Markets. Dakota and I did, whatever it was, Tuesday, Wednesday, last week. I can't remember. But volume to go maybe retest this low if we do get some further weakness, if we do get some continuation by sellers, if, we still see all the fumbling of what is the Fed going to do? Is it 25 basis points? Is it 50? You've got CPI, you've got PPI this week, you've got bond auctions. I mean, there's a lot of things that could potentially shove us down further. I don't necessarily know or think that's going to happen, at least to kick things off to start this week. But the volume's pretty thin from this low. So if you were to, in theory, lose 5370, I would, once we kind of break this high volume edge here down towards, let's call it, 5330, 5320. If you kind of lose that area, yeah, I would really would expect us to go potentially make a new low for September, but break the August low. In theory, it would be something I'd be looking for if we do get further weakness. But if we don't, kind of looking at last week's profile, okay, we're at the very bottom of that distribution. Maybe we get a little bit of a sell down towards that 5370s, 5380s, maybe even to the bottom towards the 5350 at the lowest. If you got a passive rebid there, I would look to potentially traverse some of this value from last week. So with that in mind, looking at this profile, I'm probably leaning towards putting my weekly pivot, in theory, around 5440s. I'm going to probably just stick a little thumbtack in there right now, as I may move that as things open up here tonight. And as I have my coffee tomorrow morning before fast markets, that may adjust a little bit, but I'm basing that off this, kind of the bottom third of last week's distribution, as well as this, kind of lower end of this low volume node here. It's an area at the very least, if we got a passive rebid, that's the kind of the first spot I'd be looking for where we may get a reoffer from sellers. And that would be somewhere between 5440 to 5460. If you kind of looked at a longer time frame, that's right to this bottom section here. Kind of where these wicks are is basically where you may find sellers again. But in theory, with the pivot being 5440s, let's call it, it could move a little bit higher. I'm just going to kind of base that off an eyeball right now. But based on this old distribution we have over here, if we got above that, 5460, into this higher time frame, value area here, that's where I'd kind of lean and say, yeah, buyers potentially are back in control, and we may go back and retest 5500, 5520, 5510, some of those levels that we were talking about from last week. So just a super rudimentary first look here, but that's kind of what I'd be thinking, at least to start the week, is as we're kind of dissecting this and, waiting on, I think CPI is on Wednesday. We'll talk about that in a few minutes. But it's just a kind of an interesting spot where you're almost at a decision point is, okay, are we going to rotate back into value where all this volume took place? Or are we going to retest the August low and potentially kind of make a decision there? I would say though, if we continue to kind of be hanging around these low 5400s, and if we do break it, I'm probably trying to sell that and maybe making a, kind of swing short play if we do get that continuation to the sell side, excuse me. On NQ, albeit, oops, what did I do? NQ definitely looked a little weaker of the two last week. Definitely was having a little trouble kind of staying at that range, or excuse me, at the point of control. Once we lost it, the floodgates were kind of opened. If you remember from Friday when things got a little violent out of the gate and, there was not a bid in sight. So like I said, I'm taking that seriously, but at the same time, you can't just kind of look at this and say, this is not an area where we're going to open in Globex here in a minute or two, where we could passively find some buyers ready to step in. You've got dip buyers probably ready in NVIDIA to potentially buy it around 100, around 90 again. So, without a catalyst or something, you'd have to see further weakness into the likes of some of these names. And when we've seen dip buyers step in at those levels before, it's kind of that close your eyes and potential buy type levels, or you just kind of watch and see if there are those passive bidders in those single stocks again, where then you could get behind any of these longs in theory from these lows that we had last week. And like I said, once they do get up above a certain point on NQ, my pivot's probably going to be much higher, probably around 18,600. If I'm being honest, I would really want to see tech get a respectable bid out of the gate before I'm really ready to kind of buy this with a path back towards, the 800s, 18,800s. I would like to see tech kind of see a solid rebid, NVIDIA back over 100 steadily. And still seeing call buying, if you guys know me and what I look for, those type of things before outside of, intraday scalps. Like I think, the master himself, Coach DBA, who was fading the whole move on Friday, made a ton of money. But outside of those type of plays that he's been doing, this last week, I think he pretty much only had a lot of buys, which is totally fine going against the trend and being strategic about your entries and your take profits. But I really didn't get a good solid long signal outside of those initial, out of the gate at opening bell type pops, to really give me any confidence to want to long this and feel very safe about it. You really didn't see that last week, especially in the NASDAQ. It just was violently range bound is the word or the term we always like to use, but I think it was a little more beyond that. You really weren't seeing rotations to the buy side intraday. I mean, I know we were bullish out of the gate almost every day, but if you weren't taking profit on longs, probably 20, 30 points at the most, you probably got a haircut shortly thereafter. So you had to be smart with it. But we are open for Globex here on Sunday. Pretty stupid looking spread already on the NASDAQ. If you can see the DOM there, we're jumping around. Classic after a weakness type week that is just a little all over the place, but we are opening slightly up from, no surprise, Friday's kind of weakness into the close there. If you were, I think we talked about this, if you're still just kind of joining us here right now, I know I was on mute, but we were talking about the lows after the bell and after options had closed on Friday, and you got a pretty interesting further weakness there, but we are trading slightly above those levels now. So this is where, like I said, if we start to see kind of a passive rebid off these levels, yeah, it does interest me a little bit, just given how we somewhat defended this area back when we made that August low towards the end of the week. Once we left this area, we kind of didn't look back. So these were kind of the highs of that initial start to the week once we rebid off the Monday low. So naturally, I'm looking for buyers to potentially step in, keep this area defended. All those dip buyers on NVIDIA at in the 90s, do they continue to defend those positions? So just some things to keep in mind this week in the NASDAQ too. But looking at this, the same play as ES, I most likely, if I could get a good decent long in these low 400s, high threes with I'm seeing some buyer step in, I'm seeing strength, I'm seeing, good passive call buying in the big tech names and the Mag 7 names, then yeah, I would be absolutely looking to potentially ride this up towards 600s, at least to the early part of this week. If you get some strength, I think that's a more than reasonable play given, I didn't measure this one, but let's see. Sold off about 50, or excuse me, bid up about 15 off that low and came down about 6%, let's call it. So as I said, the NQ was definitely the weaker of the two last week, but you have a slightly more, this one, if I even went almost a perfect measurement, who knows? It might be 61%, which I know if you use fibs, that might matter to you, but ES trading at about half of that, from that low to the not all-time high, but to that recent term high back to where we are now, just using those big round numbers type logic, it just, you get those 50% levels, the 60% levels, 61 with the fib in theory. You just sometimes see the algos, respond off those type of levels and rebid or sell off of that. So it's just something to keep in mind. If you know, last week, like I said, I did not want to fade the break of that balance. In the early part of this week, I'm a little more on, both sides of the fence as far as which way we may go. I don't exactly know. I'm going to be probably sitting on my hands a little bit to start the week and kind of seeing how things dissect. Like I said, do we get further weakness? Do we see a passive rebid that I can join in on? I'm probably not going to be the first person to sell this unless it starts to look like Friday, where it gets very violent, very quick, and there's not a bid in sight. And we're seeing the options activity the way we did Friday. Because if anyone was paying attention to me in TopstepTV's chat or in Rips's Discord, we had talked about how aggressive the gamma exposure was Friday down towards 5,400 SPX. And when you get it to the downside like that, or even to the buy side, and you see all of this, call exposure or positive gamma exposure, whatever you want to call it, and you get it so, I would say, skewed to one side like that and to strikes that are pretty far away, you take it seriously unless it's, options expiration or it's, end of month. It just, sometimes you don't, it's a little bit of noise, but on a day like Friday, when we were seeing such a passive bid, I guess, coming out of the initial NFP release, I took that pretty seriously. And I was yelling that in the TopsetTV chat, at the very least, that you had a lot of interest in lower prices via options for these 0 DTEs. And if you've ever watched my show or you've ever seen me trade, I use options a lot to not necessarily guide my decision-making to enter or exit a trade, but at least to formulate where I think price may navigate to on just the 1 day time frame most of the time. And we'll talk about where the longer term gamma exposure looks here in a few minutes. I'll dive into, how it looked at Friday's close, and someone in the chat, please remind me tomorrow morning, because I always forget on Mondays to show people the 0 DTE chain as well, going into the week, just to get an idea of how things may have shifted between Friday's close and, let's call it an hour or so into Monday's open, because things can shift very dramatically, especially when we get, a week like this where we talked about this last Sunday, but I don't know how much weight to put into CPI anymore, because, the Fed's on their book tour that inflation's defeated and mission accomplished and all is well. And now, as I quoted Bill Belichick last week, we're on to Cincinnati. In theory, we're on to employment data, and employment data is all that matters going forward as far as forecasting the Fed's cuts and forecasting Fed funds futures. So that may be what we're going to see this week if we don't see much of a reaction to CPI and PPI and some of these other data points anymore. I think it's a fair assessment to say all that matters going forward is the employment data and the the average worker versus the part-time worker, which, if you looked at the NFP report, was just about the only thing that really grew in our jobs data. So something to definitely continue to keep an eye on as we are in this now cutting cycle with the Fed. But so far, nothing crazy out of the gate on NQ. I didn't even see where ES opened, so let's jump back real quick. yeah, still hanging kind of right around, where we closed on Friday after the bell. So let's jump over to GC. What a surprise. Gold is still in balance, well in that kind of 5,000, or should we say 5,000, 25,000 to 25,050 type. I keep saying 25,000, 2,500. So we'll just do short numbers here and say 2550 to 2520. So that 30 to 40 point range that we keep talking about. Gold, since making this new all-time high and breaking that psychological 2,500 level, gosh, I didn't want to do it again. Breaking the 2,500 level, we just have kind of been range bound and balancing between those levels. And I kept talking last week, and I think even Dakota and I were talking about this on Slow Markets, where, I'm pretty bullish on gold. I do think we're going to head towards 2,600, in the shorter term, if that makes any sense. I expect us to go eventually break these all-time highs, but the when is, up in the air. But gold has been very tradable, I would say, using volume profile the last couple of weeks. I feel like every time I look back at the week profile and kind of looking to, potentially buy it in the low 25s, 25.50, 25.20s to 25.10, if you're kind of buying it in there, you are getting a passive rebid off these low volume edges here that you can continue to potentially ride high. Now, if you've been holding it for the new all-time high, and you were hoping to maybe swing it for a new all-time high, you probably have gotten smacked in the face a few times by these passive sellers that continue to step in as we reach those 25.50s, the 25.60s last week. Right at 25.60 we sold off from on Friday. But albeit the reaction to the jobs report and, us just kind of being in a trend day down, as well as, not only in the indices, but in gold as well. It's just something to keep in mind. But we are still continuing to passively rebid on the low 2,500s. So the same play that we've been talking about of continuing to look for those lower volume nodes, those wicks from last week of areas that I could potentially enter long on gold, are probably still, solid areas to look for going into this week if you get any sort of weakness. But, we continue to bid off 25, but one of these days, if you kind of keep knocking on that level, do we then go rotate back into the, 2480s and look for, what I'm saying is, do we rebid a little bit lower suddenly? If you keep knocking on some of these, recent term, let's call it the old psychological levels, eventually it may break. So have your head on a swivel, I guess is what I'm saying. Gold is still not my favorite instrument to trade, but it has been very tradable since we've been doing the show and doing volume profile and talking, me personally talking about gold a little more and watching this and looking at this. It has been extremely tradable recently. So that may continue here. Like I said, I'm pretty bullish on it. I would expect us most likely, if we can kind of hold over last week's point of control here at 25.25, we may ping pong between, 25.50 and 25.25 most of this week until the market kind of makes a decision and establishes a new value area here. But given all of this volume that's been occurring up near that 25.50 level, it gives me reasons to continue to be bullish. You've got a lot of interest at higher prices up here. And eventually, we may pop it and go run to, I think Coach Dakota was talking about 2,600 as his short-term level that he was looking for in the near term. So definitely is still on the table, especially with us kind of being range bound almost 100 points on the weekly time frame. It's the same thing though. I'd be looking to be doing the Nick Dolby range play and potentially buying in the low 25s, looking to sell it as we break a new all-time high, potentially take profit there. But do be aware, if you're making that play, if you're looking to get long, you can't look at this and not say there are passive buyers up here and that it's a good area to potentially take profit and not be too greedy to, go make that run towards 2,600, 2,700 even, who knows. But keep that in mind. There are a lot of wicks up here and a lot of selling. And each time we've sold, it does kind of rotate back towards 2,500. So don't get caught with your pants down, I guess is what I'm saying. If you're long in gold, don't be greedy. And what is slowly becoming my least favorite thing to talk about as far as an instrument that we all love and know and trade is going to be CL. So for the last couple of weeks that I've been doing market kickoff with you guys and us talking about market prep and volume profile, and each time I look at Crude and I try to articulate some aspect of a plan to you guys, it's just a violent mess. And I still think that's going to hold true here. You know, we got further weakness. I think I was talking about last Sunday about looking to rebid off this 71, these kind of recent term lows here over the last few months. I know we had contract rolls, so sometimes I don't remember what the low kind of below 68, 69 would be. But we had this near-term low here the last couple of weeks for August that I was talking about, an area that you could passively look to buy. Well, we melted right through it. And it's one of the reasons I don't trade Crude. It's just, there's just so many things that can kind of affect it and, you know, manipulate price. And it's just not my favorite instrument to trade. And now if you look at, you know, this recent term high that we had, probably during all of the, I think all the Middle East conflict, or not Middle East, the Israel conflicts and everything else that was going on when we were talking about all those things and how everything can kind of affect the price of crude. But whatever this near-term high was, I cannot remember the news off the top of my head of what was driving us at that time in July or June. I guess it was end of June. Yeah. To drive those highs, obviously it's always geopolitical, it seems like. But if you kind of looked at this, you know, even if you're looking at a 4 hour, you probably have a decent downtrend here too. So it's something to keep in mind. You know, where the bottom may be, I probably would have to roll to a much longer time frame chart to kind of figure out, you know, some reasonable levels below this. But given how violently range bound crude can kind of be, it's the same thing. I'd have to look back. Let's see if we can find it. Let's go to let's see if we can get it on a 4 hour. Yeah. Okay, so at least we have a more recent term going back to December here, and albeit your numbers may look slightly different because I don't remember which contract and some of these and how they were trading. I probably should look at the daily, and we can do that too. But the same play from last week when we were looking to potentially rebid off 71, just knowing this was a more, you know, I guess the low towards the end of last year, the same thing. Do we start to see passive buyers kind of defend, step in here, or does or does crude continue to kind of make new lows? And if you look at this on a, let's just call it from, yeah, that recent term high back in April and even back in, like we said, June, July, and you kind of see a downtrend here too. So it is just something to keep in mind. Do you see further weakness here? And if you do, I'm probably not looking to step in front of try to buy anything until I see buyers really kind of reclaim control and really establish a passive bid in some capacity, maybe back towards 70. I mean, I'm not looking to long, you know, crude right here, but if we got above, now I got to jump back to let's go to a 30-minute chart here. If we started to kind of rebid, maybe even get back towards 69.50, this point of control for last week, if we started to kind of get above that area, then I'd say it's a much safer long than rolling the dice and say, hey, do we kind of go start making new lows in crude here? Or do we start to, you know, I've kind of now established we have about $1 or so in, you know, a rebid off of this recent term low. Now I feel a little safer longing it, potentially in a longer time frame rotation, maybe back towards, you know, the previous week's value area, back into, like I said, the low 70s. But I'm probably not looking to long it here, just with everything going on in the world and me not being the biggest crude trader and how violently range bound it can kind of be. I would most likely wait for us to at least get back towards value here. So then I have a better idea of where I'm wrong. Because if we were to reject off of this, then yeah, we're probably going to go make a new low. But me kind of catching the knife down here, I'm going to wait a little longer for buyers to potentially step in personally. And as a reminder, as I'm going through this, as I'm talking about a million different things here in the next, you know, 30, 40 minutes, however long, please, 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 if you have questions, if you're curious about anything that I'm talking about or any, you know, concepts that you're unfamiliar with, volume profile, delta, whatever it may be, anything that I've ever talked about that you may have never gotten your questions answered, please, please, please pepper them in. We'll get to them later in the show, but yeah, start throwing them in the chat. Andrew will grab some and make sure that I am, you know, answering them in a little bit, but feel free to start throwing them out there. So let's jump back to ES, since if you guys are tuning in for the first time or you've never seen me prep, a lot of the time, given how I trade with options or use options rather to guide my futures trade, even my ES charts more or less guide my decision making on my NASDAQ charts. So if I'm taking an NQ trade, most likely there's some aspect of confluence with ES, whether it's a level, whether it's volume, it's something that's giving me confidence, just because given options and the way things kind of move and the way the SPOOS really moves day in and day out, I like to base a lot of my prep off off the S&P's levels than I do the NASDAQ. And the reason being, my entries on ES, a lot of the time you can get away with, a few point stop and it's going to hold true to that. NQ, you can have levels, but it still may wick you out 30, 40 points and the move then could happen. So it's just definitely trade. NQ just going to always trade a little more in a range as far as entries and exits go than sometimes ES does. So I do most of my prep with ES in mind, and then I kind of translate levels since they move in tandem a lot of the time with the NASDAQ. So just something to keep in mind here is that a lot of the time, because of what I'm talking about, I'm going to always reference like SPX levels because of how they coincide with ES as well. But correct me if I'm wrong, isn't it roll week? Don't we have to deal with that this week too? People will start rolling over contracts, or is that next week? Someone in the chat, please chime in. I think it is. I won't roll until next Sunday. I guess it's, what is it? Which contract is it? Z? No. I don't remember what December's contract letter is. But anyway, I think it's roll week. It is this week. Thanks, Jay. So next Sunday, we will be rolling. I will be rolling all of my charts. Usually I always do it on the Sunday. I may switch to it Friday. It just really always depends on the difference in volume. I don't off the top of my head know when Topstep X will roll over. It is Z. Okay. I'm not crazy. I don't know when Topstep X usually rolls over, but I typically do it this Sunday, kind of after, I think usually you see the volume flip Thursday, Friday, most of the time. Sometimes it doesn't always happen. And then by Monday, I guess next Monday, usually is when you see that all encompassing volume has pretty much flipped. And that's when I roll to the next contract. So we'll be working off the Z contract next week. So just an FYI. All right. So we are still trading pretty much right at that, area of open and pretty much where we closed on Friday. But looking into this week, there's a few names on earnings. I know we talked last week about earnings season pretty much being over, but there's a few names this week that are more important in my opinion than any of them last week outside of Broadcom, which I completely forgot about. But there are a few names that I think are important to pay attention to this week. None that are really going to move the market the way we've seen the other big names do in the past, but you have Oracle tomorrow after the bell. I'm very curious if you guys have ever known my background and what I used to do prior to being whatever you want to call me these days, the unemployed trader. I'm very interested to see Oracle's growth, their cloud growth. What are they doing as far as, are they taking any market share away from the likes of GCP, AWS, Azure, those type of names, but just getting a good pulse on what is a bellwether in the tech space, which is Oracle, just been around forever and, always typically has, at least in the last few years, has done pretty well, has definitely improved, has definitely adapted out of their old school, 1980s, servers, subscription type model that they used to operate in. But I'm very curious to see them in my old work, used to work a lot with Rubrik. But I know everyone, including Jack, probably, MP, everyone is going to be waiting on pins and needles. I know for Tuesday's close to see, has the squeeze happened or has this all been just a way to pass the time? Because we have the biggest earning release since NVIDIA being GME on Tuesday. So I know everyone's going to be waiting on pins and needles to see how that one goes, to see if all of the apes are still there, if they still care, if Roaring Kitty is still holding shares. I guess we'll start to see some of that stupidity and fun and ridiculousness that comes with with that meme stock. So I know I'm a little tongue in cheek kind of joking here, but I'm going to be looking and listening and paying attention to that. Not only that earnings release, but I'm actually curious just to hear the call. With everything that's ever happened with that stock, it's almost just hilarious to continue this saga. And I'm very much tuning in. I don't own any shares. I'm not planning on trading any options this week. I'm just, going to be popcorn, enjoying whatever shenanigans that may or may not come, or everyone, if it does finally break like $20, I'm here for it. I'm here to watch and see and have fun with it. I'm sure it'll give us plenty to talk about this week too. And then the last one, looking at, actually, I'm curious about not only Adobe, just the same logic with Rubrik and Oracle, just understanding enterprise software. Adobe is one of the biggest, one of the best. I do love them as a company. But RH is another interesting one too, just to kind of pay attention to. If you've ever have watched the home builders, RH is a good pulse on your high income consumer too. They were pretty much booming in kind of the post-COVID. Everyone was remodeling their house. Everyone's buying new furniture. So another good, just kind of pulse check on, I know we kind of made the joke last week with, was it Family Dollar, Dollar General, whoever it was, or 2 weeks ago, reporting pretty poor earnings and, guiding down and things like that. And they were talking how the lower income consumer was feeling a lot of pain. So now you get a pulse check almost on the high end consumer. And are people redoing, living rooms and things like that? RH, if you don't know, makes super expensive high end furniture. And they even have added restaurants into their shopping experience as well. So it's just another good idea. Just something to pay attention to if you follow the home builders, or, if you're just curious on, how that type of consumer is doing. So just another one that I'm curious and be interested to potentially see. Do they see any pain? Is there any consolidation even in that space? Do we start to see acquisitions in some of these, retail names over time? So just something to keep in mind. All right. On the data release front, we definitely have some things that could be as volatile and as interesting as they've been the last couple of years. Also could just turn into non-events. We've been talking about this for the last 2 weeks with me. As far as the big data release this week is going to be CPI, but it may not matter as much as it used to. I've been talking about this, and I know I kind of jokingly made the comment of, all that matters these days is going to be employment numbers. But until the Fed really does their first cut and kind of gives us a better forecast that inflation truly is defeated, and that are they going to do 100 basis points this year? Is it just going to be 25 and we're going to kind of wait? We'll kind of get a gauge. This is the last CPI that we have until we most likely are getting our first cut. So we want to, in theory, see that inflation is continuing to be on par or below expectations. So I'm curious to see how the market reacts. Like I said last Sunday, we had such a muted reaction to PCE. It is almost like the market is moving on from it and just doesn't matter anymore. It doesn't care as much as far as an initial reaction. So something to keep in mind if you're a event volatility trader, you just may not get the move as you did in the past. You're still going to get the algo spasm, seizure, or whatever you want to call it that we typically would get, but you're not getting that violent range that you sometimes get, or the initial pop of 2% that we've had on CPIs in months past. So I would say don't count on it being a spectacular event or something that you could eventually buy or fade the initial move. It just may be a very muted reaction. So you've got CPI on Wednesday, a pretty quiet week to start the week outside of, a few bond auctions. Yeah, nothing too crazy outside of that. You've got PPI on Thursday. You've got continuous jobless claims, initial jobless claims, and a 30-year bond auction. Sorry, that was the one I was looking for. So something that will most likely move the market, I would imagine. Sorry, hang on. Sorry, dogs barking at delivery guys or whatever is at my door these days. But yeah, you've got a 30-year bond auction. So typically, I know Jack's the biggest bonds trader at Topstep. I don't know who else is really trading bonds on a day trading mindset, but that one may move us a little bit. Just just seeing how it behaves. So I'm going to be watching that one at noon Central Time on Thursday. I would imagine it provides something potentially tradable in the SPOOs. You may get some aspect of a reaction, especially with all of the bonds traders making their Fed funds futures bets. And, you may continue to see some volatility in the bonds until we get a clearer path as far as how many cuts, how much, how big, and, the forecast with the dot plot, at next FOMC, as far as what those cuts look like, in the short term, as well as the longer term over the next couple years, or however they're going to be forecasting going forward. So definitely something to pay attention to. We don't have any other, we do have a 10-year as well. So I forgot all about that one. We do have a 10-year on Wednesday too. So those would be the two big bond auctions that I would be paying attention to, or be prepared to be flat going into that time. If you've never, if you've been in a trade, typically, if you're waiting for kind of that initial news release pop that happens with like the 7:30 central releases, you don't get that with bonds. It takes almost like 2 minutes for kind of the auction to finish or whatever, and the data to kind of get reported. So usually by like 12:02, you kind of get a reaction. So just keep that in mind. If you are trading during the 10-year or the 30-year, you may get some violent movement. You may get some poor liquidity for those few minutes. So just be prepared. Head on a swivel is kind of the theme this week. And then going into Friday, nothing crazy, but I always like to call out the University of Michigan consumer sentiment. It just always provides one of the most ridiculous algo spasms and movement for no reason. I never understand why this, whatever it is, bi-weekly, that it moves the market in a short time frame as much as it does, but it always does. So just always be prepared. That one always comes out after the bell at 9 o'clock Central. So I just love to watch that one, but it's always one that you kind of forget about because it's after the bell and you're already trading, and you get slapped by, Brad, Chad, and Thad from the University of Michigan giving their expectations on, protein prices or whatever it is. That's a stupid joke, but the logic is I always forget about that one. And sometimes I've been in trades and sometimes it's worked for me. Sometimes it's stopped me out. So just keep that in mind too. I think everyone forgets about that one, but it does provide a little bit of event volatility intraday. All right. What is slowly becoming everybody's favorite, thing that I show or talk about on this. So we have our Trader Aid gamma exposure charts here. As I said, or if you remember last week, we had a ton of exposure to the north side. A lot of the gamma exposure was up in the 5,700, 5,750, I think was the largest gamma strike that we were talking about last Sunday. Well, what a difference a week can make is, I guess, the first thing that we'll talk about here. So all of that weakness from last week, you see a lot of changes in whatever you want to call this, dealer positioning, market maker positioning. I just think of it as large liquidity areas. You can't get too in the weeds with, options gamma exposure on a longer time frame of who it is. Are these actual buys? Are these hedges? Don't worry about it. The logic just to use is these are large pools of liquidity, and I want to be on the side of price action as it's drifting towards these large pools of liquidity. So when we were talking about last week, as I said, we were drifting up toward 5,700 at the close from the previous week. And we also had talked about once we broke that balance, that 2-week balance area on ES, do not look to fade it. Look for, I think on Wednesday on Fast Markets, I was saying, I got chopped up personally because I was kind of looking to short it a little too early, but we were looking for areas in the auction that we could potentially re-offer at once that balance area broke. I was looking for more downside. We got that. I still had a pretty good week, but you see the change in the gamma exposure here now towards the downside. So this is why I've kind of been saying, head on a swivel this week. It may be a little messy to kick things off. Yes, we may get a passive rebid, but it doesn't mean sellers are not going to immediately step back in, at some of these levels like we've been seeing, even these initial pops that we've had that are pretty violent to the upside after the bell almost every day this week. You still saw sellers slam the door almost every single day. If you're looking at the daily candles, pretty violent reds off the wicks from those highs in the mornings. So just some things to keep in mind. When we're looking at the gamma exposure now, another reason I'd be looking potentially for a passive rebid off pretty much where we're opening to start Globex is going to be this large wall here that we're seeing at SPX 5400. I don't remember what the spread is. So if someone was paying attention on Friday and has a rough idea what the spread will be tomorrow morning, please type it in. But I think we were trading, maybe it was like a little less than 10 points or right around 10 points. It's going to be, actually, I think it was even less than, it might be like 7 or 8 the most. But you're going to see that spread get smaller and smaller as we head towards roll here towards the end of the week. So by Friday, those should almost be, trading in par or in tandem or in par, or I don't know what the exact, I don't remember what the term is. But given the gamma exposure to the negative side at 5,400, I would expect that to act as initially as some resistance, unless you continue to see, more and more gamma exposure to the downside being rolled down further. Like if I start to see interest at 5,100, 5,150, that's where, I think sellers, if they can get some legs, most likely will break that level, coming into this week. So something to keep in mind, just like it was last week, we saw it all kind of skewed to the north side. It's all a little skewed to the downside. If you guys have ever seen what happens when hedges come off or when the market is well hedged at times and we get a little bullish, that's when you get those very violent short covering pops to the top side. So I always get a little nervous when sellers get over their skis because they're just terrible at this game sometimes, and they sometimes sell the market down very poorly. Friday wasn't the case. It was very orderly, kind of, organized, just kind of stepping down, building some volume, and then failing again and again. So a little bit of a grain of salt is how real this is, but it's one of those things where given, a VIX over 20, given us heading into, options expiration next week and, into election season and into FOMC next week, I'm taking them seriously right now, but it doesn't mean when we have retraced the move from the high to low of August, 50%, that we may get that initial passive bid. But I'm fully prepared to still look to reoffer this at higher prices if on a 0 DTE and on the, let's call it the longer time frame one here, if this doesn't change or gets more skewed to the downside, I want to jump on that train. So given that most of the kind of true event fall will happen next week with, options expiration and FOMC, you may get continuation, but that doesn't mean I'm not looking to still buy this week, but something to keep in mind. When we look at kind of the gross gamma, so factoring in not necessarily the net, but just the kind of the total on both sides, it is pretty balanced, I guess I would say, albeit, still very much skewed to the downside, at least as far as, kind of these more near-term levels. But given this, like I said, 5,400, I think it's going to act a little bit as resistance for the time being in the early parts of this week. Hence why my logic may be to look to, rebid off of this area. So that's what the options are telling us. Like I said, going into tomorrow at Fast Markets with the TopstepTV team, someone please remind me to look at this again or show you guys as I can so that we can actively look to, adjust this or see how it changed from Friday's close to, let's call it 9 a.m. tomorrow. So someone, please remind me, because I always like to show this, because a day like Friday, it probably could have saved a lot of people from, buying every dip when you should have just been looking for the right place to potentially reoffer or waiting for consolidation and then selling it, given how put skewed the gamma exposure was from the open on Friday and then continuing to roll down to lower and lower strikes to 5,400. All right. So back to ES here. We're still kind of just chopping around, actually a pretty tight range. For a Sunday open, sometimes it does get a little wonky and violent, especially after a red week like last week. You may see a gap. We didn't get a gap up, did we? Or gap down or anything. Yeah, we got a slight gap up. I just noticed that. I'm on too long of a time frame here. Let's jump to the 5 minute. Yeah, very small gap up, which I would expect most likely gets closed before we open tomorrow morning. But nothing too crazy out of the gate. As I said, given all of this volume we have kind of sitting in the low 5400s, if we can start to build, above this 5420 level, that's where, like I said, I'd be looking for at least a traverse towards 5440 to 5460. In the 5440s to 5460 levels, that's where you may find, passive sellers again, this LVN here. But if they kind of blow through it, you're most likely going to get a retest back towards 5,500 on ES. So pretty light plan. There's a lot that I think can happen this week, but you guys know me. I tend to sit on my hands a little bit, at least for the first parts of the open on Mondays, kind of just dissect and see what's going on, who's potentially in control. And if you've been, if you were biased based on how we opened out of the gate the last week, you probably, if you weren't taking profit strategically, you probably got run over a few times. So that's kind of why I've even been leaning a little more towards not trading until at least the initial balance is set. I'm trying to get better about doing it just because you get the real move shortly thereafter or right around there at times. Like, yeah, you miss some of these little pops that we have, some of these trend days to the upside, but a lot of the trend days down start with that for some reason. They kind of get a little strength out of the gate, and then somebody big steps in like we saw most of last week. So yeah, I'm going to be sitting on my hands to start this week, but I think there's going to be plenty of trades to be had with a VIX over 20. And with us coming off a violent week to the downside last week, I think there's a ton of opportunities. I think we're starting to see a little bit of weekly range expansion as well. Like we may get start to see some wider rotation, some bigger rotations intraday, some more violent back and forth type moves. I know we didn't get that on Friday, but sometimes you start to see that, you may get 300 points down on NQ, but then it pops, 100 back up. So this could be a week that we start to see those type of bidirectional moves that can be, points can be had on both sides. And that's where, a trader like me, for example, who scalps rotations like that, that's where I like to have a lot of fun. So just something to keep in mind as we are heading into this week and coming off last week is it doesn't hurt to be patient. I think if you were patient last week, I think you had a lot of chance to make a lot of money. If you were trading Monday, Labor Day and hitting a daily loss limit, or, full porting your full boat at the new, set your own daily loss limit feature on TopsetpX, you probably had a bad time if you blew that in, Sunday to Monday trying to trade that tight, violent little range we had, I think Monday on Labor Day. And then we sold right off from that level. So like I said, if you were patient and you waited at least till Tuesday, you had plenty of trades. But you're coming in about an hour here. Guys, if you have questions, like I said, feel free to hammer them into the chat. We will grab them. I'm going to start answering some of them here in a minute. But I wanted to remind you guys, I have it saved. I wanted to watch it myself. If you did not catch Linda Rashke on, I think it was last Wednesday on TopstepTV, please check it out. I started watching the first few minutes and then I got distracted. So I have actually time after we get off here. I'm going to actually watch that. I think there's a ton of value in there. I know Dakota said it was one of the best hours he has spent actually watching, someone talk about trading, and a lot of information that can cost you a lot of money or spend a lot of time reading books to, articulate it in a way she did in a very short time frame. So Andrew, I don't know if you have the link. I can grab it too. I think we shortened it, if I recall, or not shortened it. I think we clipped it to an actual hour long segment. So if somebody wants, thank you, Andrew. Andrew just posted it in the chat. I have it bookmarked. It's going to be a part of my kind of pre-market tomorrow and some initial kind of coffee starting my morning and listening to it. Like I said, I was about 5 minutes in as I was doing something. I had it in my headphones as I was doing something else. And I got distracted, but I was very interested as the conversation basically just kicked off. So if you have not checked it out, I highly recommend it. And that's just based on my few minutes that I've listened so far, as well as Coach Dakota, making the claim that you could pay somebody a lot of money to give the information that, she was giving to us here on Topstep TV and donating her time that way. So give it a listen, give it a watch. I'd highly recommend that. Like I said, I'm going to do it as soon as we get off here on the show. But yeah, as I said, if you have questions, hammer them in. I'm going to start going through some right now. The first one, what is the name of this indicator? I don't think I showed any other indicators outside of the Topstep levels, but if you're curious on what I was talking about, that's volume profile. It's something that I use. I know not everyone does on TopstepTV, but it's a lot of the time how I formulate and find levels and areas in the auction that I'm looking to engage with. It just allows you, if you don't know what volume profile is, it's basically volume by price. So different price points, and you can set intervals different ways. I tend to just use it as a histogram and kind of, I've been using it for so long that I know what I need to look for, and I know areas that are interesting to me. But you can add, your point of control, your your value areas, and you can change the colors. You can make it, you can even add delta to this. So there's a ton of ways to do it, but I like to use it just as the basis to find levels, to find low volume nodes, to find areas where there was a ton of volume. Because when you're coming towards a point of control, it doesn't necessarily mean it's a great area for you to enter a trade. But if I was in, let's say, like a swing short from up here at this high volume edge, well, I know looking at this week, if I was to catch a short off 5,500, well, I'd be looking to take profit in this low volume edge here, and then probably a full take profit if I got the full move down to, this other point of control high volume node down here. So it just means when there's a ton of volume, when you have a point of control like that, it just tends to be an area that you can kind of get chopped up, that there's a lot of indecision. There's a lot of back and forth in the auction because, in theory, a lot of volume had traded there. So that's one of the ways you can start to use volume profile. We're going to continue to always talk about it because it's the way I trade, and it's a simple way to do market prep, even if you are new to trading futures. And it can also be replicated on almost anything that trades, as long as there is actual volume, unlike SPX. You don't actually trade SPX, but there's options on it. But there's always a good way that you can take, if you were somebody that only traded ES before and you wanted to get into GC or you wanted to get into Crude, but you understand how to prep and use something like volume profile for the S&Ps, you can then use that to start to understand the way another instrument trades, because you're just basing it off volume, more or less. That's all you're doing. You're basing volume off of certain price points. So it allows you to find areas in the auction that you can enter, exit, take profit, all of those fun things. I can't believe I was on mute for the first 30 seconds of this show, by the way. I'm still not over that. I'm not going to live that down. Next question. Do you trade a personal account? So yes, I do trade a personal futures account as well. I haven't been as active in it lately just because summer sucks, to be honest. And when I trade my personal account, I do trade intraday, but a lot of the time I look for longer time frame holds that I can potentially hold overnight. A lot of the time I swing with micros on a swing time frame in my personal, just a couple micros, just something I can hold to feel like you got a little skin in the game, or I'm trying to catch a longer move. But that would be a move I'd be trying to catch would have been probably up in these 5600s down towards this area where I'd be starting to peel those off or take profit. On my longer time frame, though, I guess over the summer, I was swinging more with, shorter dated options than I was with micros. But now that volatility has returned, I'm going to probably still be trading my personal account a little bit more. It just doesn't make sense. It didn't make sense for me to get chopped up all summer just because we were kind of slow grinding to the north side, trying to make new all-time highs and then failing. And then you have the August low and we rebid off that. It's just it's that type of price action that I don't want to put my personal capital at risk at times, just because it's been hard enough for me to read in my Topstep accounts that why would I then risk my personal accounts on top of it that in theory don't have daily loss limits, don't have, some of the other risk things, and, allow me to be tilted the way a personal account can because I'm in control of all of it. So I'm not going to put that capital at risk at times. But now that, we're heading into September, October, a more volatile time of the year, I'm looking to potentially put on a couple swing plays in my personal account going forward. But I missed the window on this kind of near-term short in it. So I'm looking potentially for the next trade, but not beating myself up too much just because I haven't been trading it. I've been trying to trade a little bit less too. Like last week I had a good week, but I was pretty much done with, and I was shorting too a lot of the time, but I feel like I took my profit and I kind of locked it up for the day. And then we continued to melt a few of these days. So I missed out on, being able to hold trades that I just basically took profit on, didn't leave runners and things like that. So, it's still kind of been that market, but like I said, I had not been really trading and leaning towards wanting to use my personal account. Nick, do you use footprint charts? I don't. I tried to learn it, honestly. I use Delta in a few other ways. Like there's a million ways to look at this, I guess, similar types of information. I never just, it's always what makes sense to you to understand the same things that are happening in the auction. For some people, a footprint chart works. For me, I just couldn't quite read it in real time the way I can read like a Delta by price or just other things that are happening or other indicators that I have. It just didn't quite work for me. Something about the, aesthetics of it, even just, it didn't quite work for me the way some other ones do. So if it does work for you, it's a great way to understand the auction. It just didn't quite gel with me. I couldn't quite get it where I really felt like confident in what I was looking at and reading and then executing on. So for me, different variations of how to read time and sales, that one it just didn't work for me. But if it works for you, I know a lot of traders that do use it and have a lot of success using that to kind of read the auction and read time and sales and understand reversals and, excess lows and poor lows and different things. So by all means use it. I don't think there's a footprint chart in TradingView or Topstep X either. That'd be interesting. I don't know if there are a lot of people that actively do use it. That'd be a cool one too, to see inside of Topstep X in the future. Hey, Nick, what about strategy? What do you look for in a setup and then the entry? That's like, I guess, somewhat of a loaded question. So for me, if you've ever watched me trade, a lot of the time, I'm not a great breakout trader. I tend to, look for consolidations and then potentially fade a move in a specific direction or waiting for a break of a certain range that I can kind of jump into. Or fading stop runs, I guess, or looking for, I guess the logic of like how I could describe my strategy or what I really look for. I look for confluence of a few different things happening in tandem at the same area. So whether that's, a stop run right into like an options wall and then an excess low below initial balance, like all of those things. And then you kind of see buyers potentially step in, and I look on time and sales and someone's throwing in market orders, in 100 clips on ES or something. Like when you see that happening with an excess low, right at an options level, right at after a stop run, like exhaustion type move where, market orders are getting puked to the downside, and then you kind of slowly start looking to build out of it. That's a lot of the time a trade that I always take. So when you have that all kind of happening, I guess in tandem, that's stuff that I look for a lot of confidence in not only entering a trade, but definitely feeling like a trade that I can potentially hold with some confidence that we just, like we said, we pierced the low of the previous day low or the overnight low, and then something else happened that gave me the confidence with those aspects of different things kind of firing is typically how I trade. I look for that kind of full hand of, if you're using a poker analogy, like the full hand of cards that gives me the confidence to say, yes, a lot of the time, this is a good entry. And the reason I say it like that is because a lot of my trades tend to be fading somewhat of a direction, if that makes any sense. Like I'm not necessarily fading a trend day, but in, the early parts of the session, I'm looking for some aspect of a reversal there, or I'm looking okay, hey, we're building, I think we put in the low of the day here, or we put in a low for, let's call it the next 30 minutes off this specific move. So for me to want to fade, let's say that short-term momentum, I want to see a few things happening or a few different it hits a low volume node. It's an excess low. I saw Delta flip from negative to positive. I saw time and sales, those market orders coming into the buy side. That gives me confidence with my style, which tends to be sometimes fading shorter time frame moves at least how I somewhat trade. That's what I look for. And that's kind of what my strategy sometimes is for entries. I look for those things to happen at various levels and in tandem with each other to give me confidence to not only enter, but hold the trade. Nick, what is gamma exposure? So this is a rabbit hole question. But gamma exposure, just think of it, to make it the most elementary level, like what to think of it as. Think of it just as large pools of options liquidity that's from a variety of players. Let's call them traders. Let's call them day traders. Let's call them institutions. Let's call them market makers. And a lot of the time, it's just an aggregate of actual purchases of various contracts that are happening, of hedges that are in place. So don't think of it about like, hey, don't get lost in the sauce of like whose orders are these or whose liquidity is this. It really doesn't matter. Just think of it as large pools of options liquidity that can act as magnets, can act as support, can act as resistance. If you really want to know what it is, I made this joke a few weeks ago when someone asked this question. Put it into ChatGPT and ask them to explain it to you as if you are a golden retriever. It gives a very simple explanation of what's happening without it becoming just so much noise. Because like I said, this is a rabbit hole question because it's a loaded question because gamma exposure is super complicated. And even I don't fully understand it, which is why I use a very simplistic histogram of just the large pools of liquidity. And then I translate that to what is the ES level that corresponds with that level on SPX. Because anything more than that, if you're trying to read gamma exposure, like in theory in real time, as dealers are changing their positioning or they're hedging, you just get bombarded by noise and things that are just somewhat difficult to understand. So that's my recommendation is if you really want to understand it, there's a ton of content on it. And there's a ton of resources to help you understand it. But just like you see liquidity on the DOM, just like you see liquidity in Bookmap, that's all it really is. That's all you need to think of it as. When you see those large bands on Bookmap, sometimes they can act as magnets and also act as resistance when that order that, call 1,000 lot, whatever it is, gets filled. That's most likely somebody potentially looking to get into the market. They also may be exiting, whatever. But when you see those large walls of liquidity, price tends to at least kind of bounce or, sell off that, at least in the shorter time frame. And then things tend to happen, but it just is going to act as a magnet and then the resistance or support. What bond auction typically carries the most weight? That's a good question. I don't trade bonds, but at least in my, eyeballs the last few years, it's probably the 2 and the 10s. The 30-year definitely does carry weight too, but at least in the near term, the 10 auction and the 2-year auction has, at least when I've been intraday trading around those, you tend to see the most movement. And there's no surprise that the 2s and 10s have been inverted for so long that it kind of makes sense why I guess that might be the most market moving in the short term, but the long bond is always still important. So you have a 10-year this week, you have a 30-year, both are very important. And like I said, as we're in this Fed cutting cycle and as we're still kind of up in the air on how long it's going to take them to continue to kind of cut us back and at what point do they stop? And are we holding in a, 3 or 4% Fed funds rate for a little while? I don't know. We'll find out. So, and the bond auction traders will probably react based on, this week, but most likely, the next set of bond auctions that occur after FOMC and after they have a clearer picture of, the dot plot from the Fed. So this week it's still going to be important, but my guess is they're still going to be operating with the bond auctions are going to be operating with a 25 or 50 basis point pretty much priced into them going into next week anyway. So, but we'll see. It always does tend to provide some aspect of some tradable action or a nice little pop or, sell when the results come in. So just like I said earlier in this segment, just head on a swivel week, guys. That's the best way I can describe, my perspective. Keep your composure. You can't have anyone freaking out there is what I would say this week. You don't take trades at this time? No. I'm one of the worst. As far as being a pretty or a half decent trader is how I would describe myself. I'm somewhat good at this game, but I am a terrible Globex trader. I really am. I leave it to the master himself, Coach DBA, to trade slow markets. I can't do it. It's a personality thing, guys. Honestly, I'm not patient enough for my style of trading to sit here and try to scalp a few points, because what happens when I try to trade Globex is I just get bored, and then I just try to be like, you know what, let me just add another contract, and then I add another contract, and then I'm oversized. And then you finally get some, poor liquidity type move that stops me out, or maybe it makes me money, but I'm usually, I feel like on the wrong side of Globex trades. So I just don't do it. I've matured in my trading to not bother with the overnight session. I may take a pre-market trade here or there. I definitely do still like to, trade the aftershock of some of the news releases, not the pop, because I won't get anywhere near that spasm. But as things stabilize, I do sometimes, throw on a trade there and jump on usually with momentum. But I have no interest in trading the overnight. I'm just terrible at it. That's really the truth. But I have been noticing London tends to trade a little cleaner, but I'm not awake at 2 and 3 a.m. So if you're tuning in with D for the London Open, you probably have some pretty decent overnight trades. But as far as the even the Asia Open, I just have no desire. Like until 8 o'clock or 7 o'clock. I think Australia opens at like 7 Central, and then most of Asia opens at 8. But I'm very much just sitting on your hands. But when we were having the volatility overnight, I did take a few scalps in here and there, and I did make some money, but I also lost a few trades during that same time period. So I'm just not a great Globex trader. That's really the truth. That's why I don't do it. Know your style, know your time frame, and know when you're at your best. And some people it's trading the open. Some people it's, you need the institutions to kind of be out of the room, and let's call it at 9:30, and you get a good hour until the Euro close. Maybe that's your window that you make a lot of money. Run your stats. That's a good thing to do too, is just understand time frames during RTH that you're making money or losing money, and maybe sit out the ones you're losing money in. To be honest, it just may be too volatile, or you're not great at managing risks when the institutions are just ping-ponging and accelerating us various directions. So I know that I'm not a great Globex trader, so I've tried to stop doing it. What do you generally use for initial balance for Globex Open? I don't. I wouldn't say use initial balance. I guess if you're trying to trade the Globex Open, there's probably some ways that you could kind of look at an initial balance period and try to trade off it, but it doesn't tend to observe those or be, used at times. It just doesn't use them. You're much better off using other market generated information that's not from the 5 p.m. Central Open from the previous day. Like if you were look at some of the levels from Friday, that's probably a better range to use as an initial balance for Globex. Because likely you're going to kind of stay in a portion of Friday's range, or reverse off or bid off the previous day low in theory during Globex. That level may hold until RTH. Those things kind of can happen. It just depends where you're trading, but using MGI from the previous day, if you do trade the overnight and you do trade kind of the, the Asia session open here, that's what I would use. I wouldn't put too much weight on, let's call it an hour initial balance of the Sunday Open. I just don't think it holds as much weight as the previous day levels of MGI probably would. I'm not basing that off, data that I've run, but I know the overnight session tends to obey previous day levels, some of the weekly MGI levels, better than it would, other price action or even VWAP at times in the overnight. So just keep that in mind. If you are trading this, use MGI, because the algos are really the ones running the show a lot of the time in the overnight anyway. And they tend to somewhat keep us balanced with MGI for the most part. Always a grain of salt if something happens, if there's news, whatever. But if you are trading it, I think MGI is a good way to at least have ranges. Rather than entering when it opens, you could put a limit order in at some of those levels, and you probably are in a better situation than if you were to try to enter right now. But if you were to throw this maybe at, looking for a long off the gap close, like down at 54.04 or wherever that gap actually is closed, that's probably a better level, which is basically where we closed on Friday to look to long off of, in theory, if you actually wanted to trade this. But I don't really recommend anyone trade this until at least the Asia Open, just because its liquidity is so crappy at times during these first like hour, 2 hours. If you're watching Coach DBA, I mean, that's usually a better time during slow markets to try to trade Globex, but to each their own. I just suck at it. That's why I don't have any sort of special indicators for Globex itself. But yeah, guys, that's the gist for the prep side of this. We can hang, you can throw in more questions. If there's been a few, any others in the chat, I don't think I caught a few others here. I don't know if anyone has like asked them in the last like minute or two. Actually, I did see one. How do you look at previous day's volume profile? Well, if you're using some aspect of a charting software, if you're not using TopstepX, there's probably an indicator that you can just set it to 1 day, and then it should just start spitting them out. Or you can do, I know most charting softwares have a volume profile potential little like widget here that you could grab. But if you're using TopstepX, just grab the fixed range one of the indicator menu, and then basically just drag the previous day range and it'll spit it out. But also if you're using the visible range one, you can just basically go to your screen and, just highlight the candles from the previous day's session, and it'll spit out on the right in the visible range volume profile indicator, Friday's volume profile. That's one of the reasons I like to use the visible range one, because no matter your time frame, it can adjust so that as you're looking at things, you can have an idea of where the most volume is traded, where the least volume is traded. And just as you're looking, when you use like a 4 hour with the visible range volume profile, it's just a good way to find levels. And you can kind of use that with confluence of maybe other things you're seeing in real time or on a longer time frame basis to kind of guide decision makings, find levels, establish different, trade entries, trade exits that you'd be looking for, draw boxes, range boxes. I mean, there's a million ways to start using this. And I think every week that I've been talking about volume profile on the show, like we've talked about various ways to kind of use it, not only to do prep, but just to kind of guide and understand the auction a little bit further. And we're going to continue to do so. So please continue to ask, any questions around volume profile. If you're still new to it or you're trying to understand it, I know, D is a big volume profile trader too. There's a few of us that actively, I would say, use it intraday, but it's a good way to, have a good understanding of what's going on in the auction and where buyers are present, where there really was no interest in price transacting, those type of things. But I'm hopeful we're going to get an update to this indicator. I would hope in the near term that I can not have to draw them manually if I want to start spitting out a rolling week like this. That every week, rather than me draw these, I would hope that we can have the other one where it just starts spitting it out once I have it defined, and then I can build ranges, and you can start to, like I said, draw those boxes and have a good understanding of, different areas of interest. But until then, it's super easy to manually draw it, as you just saw from the 1 day profile here that I drew. But yeah, guys, the other elephant in the room that we'll address, and if there's no more questions, I'll let you all go and you can get on with your football Sunday, watch the late games here. But if you've been living under a rock or you haven't heard the news, the TopstepTV team is going to be, away a little bit this week. So you're getting a bit of a takeover from the traders this week. Coach DBA himself is going to be running the asylum here on TopstepTV, along with me, along with Rips, Coach Jay, I think a few others. I think D is coming on, but we are doing a little bit of a trader takeover this week. So you're going to be getting a lot more of me, a lot more of Coach Dakota all week. And like I said, a lot of the other traders that are on here, we are doing a bit of a skeleton crew from Wednesday, Thursday, and Friday. But like I said, you're going to be having, me, Coach DBA, you're going to have Rips, you're going to have Coach J, you're going to have D. all of us kind of chiming in and picking up the slack while the TopstepTV team is, in meetings and having fun and doing all of their, fun stuff while they're away. But you'll have still a place to hang out from bell to bell this week with us towards the latter half of the week. So tune in. It's probably going to be a little bit different. We're definitely going to, hopefully have everybody still participating in the chat. I don't know the state of the house account for the later part of this week. I think Dakota and I are going to get some clarification on what that looks like as well, but it should be a pretty fun. I don't think Dakota and I are going to bring quite Andre's energy, but it should be a good time. And I think we'll definitely get to, kind of dissect things a little bit further and, probably focus a little more in the weeds on, actually getting in and out of trades and other concepts, just because it's going to be a smaller crew and we're going to have plenty of time to fill in with other questions and things that we can, actively talk about if we're seeing in the, in the auction itself. So it should be a really fun week. So if you have not seen, I think Rips and Dakota did a takeover, might have been like during the holidays last year, but it was a little different, but a lot of fun. So this week should be cool. But that's starting on Wednesday. Wednesday open, you'll have Coach Dakota and I believe Rips. I got to check the schedule, but I think that's the first one's on the docket, and you'll have me with Dakota on Thursday, and then I'll be back for Power Hour, I believe, on Friday, or I guess not even Power Hour, the afternoon portion of TopstepTV with Dakota. So I hope Dakota's drinking Celsius or, taking some caffeine pills. He's got to, keep us all afloat and run the show here Wednesday, Thursday, and Friday with a little help. But, he's going to be the man in charge and the man with the plan. So, send your complaints to him and not Andre in the chat these days, or I guess for the latter part of this week. But that's it, guys. Yeah, it's gonna be a crazy week. That should add a little fun for all of us here on the show. But thank you guys for tuning in. I hope you learned something. I hope you have a good idea of how to kind of construct your week or how to attack the early parts of this week. As I said, I'm going to be a little hands off to kick things off for this week, as I want to kind of wait and see who gains control in the early part of this week. But I would not be surprised if we see a passive bid to kick things off, at least in the near term here on Monday or Tuesday, and we maybe retrace some of last week's range. But thank you guys for tuning in. As always, if you have questions, feel free to shoot them to me on Instagram, shoot them to me on X, or in the chat on TopstepTV tomorrow morning. Happy to answer them. But love you guys. Thank you for tuning in. Everyone go enjoy your Sunday evening. And I will see you bright and early tomorrow morning on Fast Markets.